How's it going, guys? It's AO Ballin here. In this video, we're going to be talking about finding the weekly expansion before it happens. Let me ask you this. Are you tired of being on the wrong side of the market? In this video, I will explain my personal weekly Forex model that helps me anticipate weekly moves with a high degree of accuracy. We're going to be determining the weekly bias, identifying key price levels, and executing trades on lower time frames. By the end of this video, you will have a step-by-step framework for mapping out your next trading week. Let's begin. So, the power of the weekly candle. The chart in front of us here is the Dow Jones futures contracts, as you can see in the top left corner of your screen. For the week, we have three conditions or three potential scenarios that happen every single week. That is, as we can see on this week here, we wicked the previous candle high. The second option will be closing above the previous candle high. And then the third option will be running both sides of the previous weekly candle, as we can see in this week here. So we're going to be going over all three scenarios to see how we could have mapped out our week using the information we have prior to the weekly open. So we're going to start from this week here. May 19th, 2025. So going into this week, we had a fair value gap, on the downside, and above price, we had our previous weekly high, and we had our BPR above price, which will give us our potential buy side target for the week. On the bearish side, we had our fair value gap. So at the start of the week, every Sunday, we want to mark out the last three weekly candles. This will give us our current range in price, or let's say our look back in price. As you can see, in hindsight, we traded back into the 50% as well as the fair value gap, also running out the buy side liquidity into 50% of the weekly BPR. So we're going to go down to the 4-hour time frame. The 4-hour time frame is generally where we would get our entry structure, because obviously we want to be able to catch a trade earlier in the week and get a weekly expansion going into Wednesday, Thursday, and Friday. So Generally, if there's no fair value gaps, we mark our nearest PDRA. You can think of PDAs as magnet for price, key levels where we can expect a reaction. For this model, we will be looking back at 3 candles for said PDRA. This could be fair value gaps, 50% of overlapping wicks, order blocks, etc. So, having this information in our chart, we have our fair value gap, we have 50% of our look back range, the last 3 weekly candles, we have the previous week high, and we have our 50% here, which will be the highest we would expect price to go for the week. Going down into our 4-hour time frame, the first thing we want to look at is where do we open for the week. So I'm going to put a horizontal line at the weekly open on Sunday 6 p.m. That's New York time. So, generally we wait for price to create a fair value gap in the direction of our weekly point of interest or draw in liquidity. So going into the week, we had this fair value gap for price to trade into, as well as our 50%. Our first point of interest will be the fair value gap. We also had our buy side and our terminus, which came in around 42,870, give or take. So our entry technique would be waiting for a 4-hour fair value gap, waiting for a retest of the gap, and entering at the open of 50%. So for this week, we have price trading towards the buy side going into Monday open. Then we form a fair value gap. As we can see in hindsight, we traded into our buy side liquidity before pulling back. And this happened on Monday. Come on. When we get a run to our buy side, we don't anticipate price using this fair value gap as a continuation because we've ran the buy side liquidity for the week. So we can look at this initial swing as a Judas swing. A Judas swing is a false move designed to trap traders before the real move begins. So a Judas swing is a false move designed to trap traders before the real move begins. We usually love this. We love to see this before our fair value gap forms. But as we can see on this week here, or in this week rather, we formed a fair value gap and traded into our buy side liquidity. So, in hindsight, we would rather want this to act as an inverted fair value gap for price to trade all the way down into our weekly fair value gap. So, this move above the open price can be looked at as our Judas swing. So this will be our Judas swing right here. So everything above the open would be our Judas swing, which would also form our top wick for the week, for the weekly candle. So I'm gonna scroll to the end of the week, and I'm going to put daily dividers so we can see how we played out throughout the whole week. So we have Monday, we have Tuesday here, we have Wednesday, we have Thursday, and then we have Friday. So, as we can see here, Monday from the high of the week and Friday from the low of the week. This happens a lot. So let me take this off so we can see a bit more. On Monday, we had price trading up, giving us our Judas swing. On Tuesday, we had price trading to our fair value gap. Would we be expecting buys? No. As price has traded into our daily and weekly fair value targets. So what we'll be anticipating now is for price to close below this fair value gap and form a fair value gap in line with our weekly bias. This is where we'll be looking to take our entry. On Tuesday, we have a retracement model. No entry formed, so we stayed put on Tuesday for this model. On Wednesday, as we can see at 10 a.m., at the 10 a.m. 4-hour open, we have a Judas swing into our fair value gap. This is where we look to take our entry. A fair value gap is formed of 3 candles, so our stop loss goes right above the high. And we allow price to expand for the week, taking profit at the open of the weekly and at 50% of our initial weekly range, which is right there. That's our 50%. That would have been a 5-hour for the week, hitting our TP at the 6 a.m. candle pre-New York. So this would be our first example. Let me go over it one more time. When price opened, we formed our Judas swing into our buy side liquidity and our BPR, 50% of our BPR on the weekly time frame. Then price reversed and closed below our fair value gap, the first fair value gap formed for the week. Very important. We have a fair value gap here, but this is not the first one. So this is not where we'll be looking for our entry to form. Wednesday, we have our entry. On Thursday, we have a continuation. That would have been another chance to get into the market or to scale in. So, this is our first example of the model. Let's go back to our weekly time frame and go over our second example. So, our second example comes 2 weeks later. We can take this off. And now, what do we have here? What you want to do is, the first thing you want to do, you want to mark out your PDRAs. So where's price going to trade to next? What's our next point of interest? On the buy side, which is above price, above the previous week's candle, and then below the previous week's candle also, and inside the previous week's candle. So let's see what we have. So, 2nd of June is the weekend that we're talking about. So we had our previous week high, which came in right there, and our previous week's low. This is the Dow Jones, so generally we're bullish. Although we can see we're coming from a fair value gap on the weekly time frame. If we're looking past this previous week's candle, we have a fair value gap which is above price. This would have been our weekly drawn liquidity. We also had this swing high. We have swing highs and swing lows are always a drawn liquidity. You should write that down. So I'm going to take this off. And lastly, we want to mark out the 50% of the body of the previous week. Bearing in mind that we're coming from a bullish PDRA, so we should be going to target buy side liquidity next. As we can see in hindsight, the low of the week formed exactly at 50%. So let's go down to our 4-hour time frame and see what information we have. So this is our weekly buy side liquidity. Buy stops. I'm going to mark out the close of the week. Okay. So what do we have here in price? This week is where we can see our continuations come from, starting 1st of June. So for the week, we can have the low of the week form here, or rather our Judas swing. So this price movement below the open at the start of the week, once again forming on Monday, can be looked at as our Judas swing. So from the previous example, we want our Judas swing to form before we start creating fair value gaps in the market. As we can see here, Monday 6 p.m. candle formed our fair value gap. So at this point, we start looking for our buys for the week. To keep things simple, we enter here. Stops below the third candle that forms the fair value gap, the BC, buy side, inefficiency sell side. Okay. Targeting our terminus, which is the weekly fair value gap on the buy side. Our entry forms just right before Tuesday open. Then we have Wednesday open right here. We have Thursday open. And then we have Friday open. As we can see here, Monday formed the low of the week, and Friday formed the high of the week once more. Once we created our 4-hour fair value gap, price also came in, ran internal liquidity or failure swing, also trading into 50% of this 4-hour So, BPR, that's what I was looking for. We traded into 50% of the 4-hour BPR that forms from the open of this candle to the close of this candle. And then we leave price to expand. We take partial right there, and as we can see, the next week hit the target, which we'll get to in a minute. So that would have been this for this week. The low, the anticipated low got hit. We didn't quite trade up into our terminus, but we barely traded into the buy side liquidity as well. But the point is, we expanded up after the fair value gap was formed. You can go even to a lower time frame to get more precise entry and stop loss based off time and everything, but I'll leave that to you how to do by yourself. Let's go to the last example. This last example actually comes in this current week that's closing, the 9th to the 14th. Speeding through this, going into this week, what do we have? Above the previous weekly high, we still had this untapped fair value gap. So this is definitely where we'll be looking for price to form its high of the week or trade into. What do we also have? On the sell side, we have this BPR. All we need is a 50%. Wicks. Are also a point of interest when it comes to these, and our buy side liquidity will be there. In hindsight, we can see how accurate this was. The high of the week forming inside the fair value gap, the low of the week forming at 50% of the previous weekly candles week. Let's go down to our 4-hour time frame. So this week we had we had news on Wednesday, Thursday, and Friday. No news on Monday and Tuesday. Generally, that gives us, or that tells when we should anticipate our expansion in the market. We had CPI at this time. We had PPI. And then there was another high impact news today on Friday, the day I'm recording this. I'm recording on Saturday. Okay. So we have our weekly open right there. Our 3 points or 4 points of interest would be the buy side, our terminals, which is the weekly fair value gap, our 50% of our BPR, and lastly, 50% of the week of the weekly candle, the previous weekly candle. So, if we were to anticipate a bearish Judas swing, we would have wanted price to come and tap here, but we didn't. We failed to tap here before trading higher into our fair value gap. So this already kind of gives you what the weekly candle is going to look like. Once again, we form our fair value gap, but we tap into our buy side before we come back. That tells us that we have a potential IAVG forming, inverted fair value gap. So once we close below the high of this candle on the 11th of June 2025, 2 p.m. for our candle, we anticipate price trading back into it, trading into our sell side liquidity or sell side drawn liquidity. We have Monday, we have Tuesday, we have Wednesday, we have Thursday, and we have Friday open. What does this tell us? We have Wednesday high of the week and Friday low of the week, on a week where news starts on Wednesday. So what do we have in terms of our entry now? We had no fair value gaps formed until price ran the buy side liquidity into our weekly fair value gap. That tells a lot. We then had price expand to the sell side, running out these lows, or rather breaking structure to the downside. Price then formed a retracement. Using our Fibonacci, we can see we traded up all the way into our 0.705 golden spot. That's beautiful. That's precision. Where would we look for our entries? To keep things simple, the open of the IAVG. Where do our entries go? 1, 2, 3. We can put it at the high of this candle, aiming for our sell side targets or our drawn liquidity on the sell side, which we got from the weekly time frame, not the 4-hour. You always want to get your targets from the weekly time frame because it's a weekly expansion that we're anticipating. So this would have been a 2-day trade. Generally, our trades take about 2 days to play out. Rarely do we get a trade playing out 3 days per se, if I do say. Okay, so our key takeaway would be: 1, determine your weekly range from the previous 3 weekly candles. For this week, 1, 2, 3, this would have been our range. Coincidentally, we can see where we traded into. We identify our PDRAs for the week from the weekly time frame. For this week, remember, we had our targets, which would be our buy side targets, and we had our sell side target. Let's just use our extremes for now. We go down to the 4-hour time frame to get our Judah swing, our fair value gaps, etc. We generally look to execute on Tuesdays and Wednesdays, latest on Thursdays, as we can see in this week here. But generally speaking, if we look at the previous week price action, we had our entry from Monday going into Tuesday, let's say Tuesday, and our target was hit by Friday. The week before that, the expansion happened on a Tuesday, as we can see here. The high of the week formed on a Wednesday, and there was nothing going into Thursday and Friday. The week before that, we have the high on Friday, entry on Thursday for the week. We get a weekly expansion. So, as we can see, Tuesday to Thursday is generally when we get our entries. That will be it for today, guys. Let me know what you think of the video. Let me know if you have any questions, any suggestions for the next video. You can DM me on Instagram at AOBallin for any questions, one-on-ones, anything like that, etc. Make sure you like, comment, subscribe to the channel. Check my description for all links. Like, comment, subscribe, leave a comment, share the video, and I'm out.